All right, everyone, welcome to financial management training. My name is Elizabeth Rosa and I'm with First Big Inc. I'm listed in the participants as First Big meetings. Feel free to direct message me or, send something in the chat if you need any technical assistance, and I'll be here to support you throughout the next 2 days. I will be placing also in the chat the links to all the documents, the agenda and everything shortly. And yeah, so if you need anything else, I'm gonna pass it over to Christine.
Good morning, everyone. I'm Christine Dennis. I see a lot of familiar names this morning, so that's always good. I am a CPA based in Oklahoma. If you all were here early, you heard me talking about how happy I am. It's finally not 107, so we're pretty excited out here. Couple of things I want to clarify before we get started. First, did everybody have an opportunity to download the PowerPoint? If so, you'll probably want to use it for note taking. Second, I want to clarify this is not an accounting class. This is financial management. How do we use the information that we get from our finance department? We're a pretty small group, so why don't we do some introductions? Let me know who you are, where you're from, and what your position is, and I will let you all volunteer. And you're welcome to use chat or unmute yourself, whatever you're comfortable with. First, disclaimers. I am not an attorney. Do not take legal advice from me. I am telling you what I think. I am going to give you a ton of regulatory requirements. Use your best judgment. I'll tell you where I'm getting my opinion. Okay. I cannot guarantee that my opinion is ever going to hold up in court of law. So again, you'll hear me say this frequently. Good morning, Nicole. If you've worked with government programs before, this is going to seem fairly familiar. And we've done that. So what do we hope you get? This is not, again, this isn't really an accounting class. We'll do some discussion on accounting. We're going to have a lot of discussion on government accounting and how that's different from for-profit accounting. We'll talk a little bit about GAAP. The main things we're going to focus on, though, are financial reports. We'll do some review of some basics transactions, but the focus is more going to be on compliance, performance. Are we getting the right information to the right people in a way that they can make good decisions? That's what our plan is always. That's the whole point of financial management. Do the right people have the right information? I mean, think about it. Can you make good decisions if you don't have all of the pieces? And the answer is no. So we're going to talk a lot about what those pieces are as well. Before we get going, let's do a quick overview of the regulations. Anybody know where most of the financial management requirements live? What document? CFR 200. How many of you have a basic understanding of that? How many of you have at least heard of CFR 200? I'll be honest with you, I have this thing printed out next to me, and I have a copy always saved on my computer. The key with 2 CFR 200 is this has all of the administrative requirements for all grant funds. There are a few differences that we'll talk about that are in 24 CFR 1000. But for the most part, anytime you are wondering about what you have to do, what's required once you have the grant, this is where you go. It has financial management, it has internal control, procurement, audit, allowable costs, all of those things are in 2 CFR 200. It's called the Uniform Guidance. It's had a lot of names over the years. It consolidated and streamlined 8 federal regs. So back in the olden days, we used to have to go through multiple different sections to figure out what the heck do we do with this? What's our audit rule? Is this an allowable cost? How do we do procurement? Now everything is in one place. Really made a huge difference as far as making it easier to stay in compliance because you're not going back and forth. Big thing is performance over compliance for accountability. What the heck does that mean? Anybody want to take a shot at that one? Can you be in compliance without getting really much done? Sure. Yeah. We're just paying payroll. We're not actually accomplishing a lot, but our costs are in compliance with our award. What's the report we talk about for performance?
Is that the CF or the CFR 425?
The SF 425 is definitely one of them. What do we learn from that? How much money have we spent? How much of our grant money was spent? The other piece that we have to look at is the annual performance report, the APR side of your housing plan. What did we actually do? Our IHP gave out this list of stuff that we were going to do. We were going to assist all these people. We were going to provide a bunch of assistance. We were going to develop some housing. APR says, here's what you actually did. And if you didn't hit it, why not? Are you in trouble for not hitting your APR, for not hitting all your IHP goals? No. It happens. COVID happened. If that didn't screw up your IHP, then nothing will. So we will spend a lot of time talking about IHP, Indian Housing Plan, and APR. How many of you are involved in developing either the IHP or the APR? How many of you actually see it? Yeah. Why is it important that you see it? This is where your whole plan for the year lives. Anything that's in your approved Indian Housing Plan is an allowable cost, allowable activity. You keep the records and deliver the reports. So does council ask questions? And why do we care if council's asking questions? Executive director does the presenting, good. And that makes sense. You report to the BOC, yeah. BOC, does your BOC report to council? And I'm asking because most do. Your director, okay. Yeah, why is it important that we have that reporting to council? Who gets the award? Whether you're a tribal department or a tribally designated housing entity, the tribe is usually the grantee, which means you have a responsibility to make sure council is up to speed on what you're doing. They're going to be held responsible, so they need to have an understanding. Yeah, approve the application for additional funds, oversee the goals of the program. Absolutely. They are also in charge of overseeing your self-monitoring, making sure corrective action plans are met, making sure all of your reporting is done, all of those things. If you are a TDHE, you probably have a board of commissioners who is usually appointed by council in some way, and usually has at least one council member on that board. And they are kind of the go-between of the process. These people are your audience. These are the people that you are trying to provide information for, because they're going to make the final decision on so many of these things. So one of the things that we've got to think about is, are they getting the information they need? And do they understand it? It's a lot. It's really hard to hold them accountable if they don't know what it is they're supposed to do. This is one of the many places where financial management comes in. Okay, we want to be consistent and transparent in how we treat costs. I mean, if it's payroll across the board. Strengthen oversight. How do we, anybody know what one of the basic reports is that strengthens oversight other than the APR and the SF 425? Do y'all do a budget to actual? Yeah. First off, that budget to actual is required. That is a rule in 2 CFR 200. Second, it's a great way for the oversight people to see what's going on. Who else does that budget to actual report help? You should help your staff, your program directors, your executive director. Does this report make sense? Does this show what we actually did? What I know we worked on this last month, is that reflected in this report? And we'll talk about ways to check that. It assists in reducing waste, fraud, and abuse. Okay, your auditors now have a requirement to be aware of waste, fraud, and abuse. They're not technically responsible for detecting it unless it's material. That's a whole different class. But in general, are we using our resources appropriately? Questions on this? Keep peeling that onion. Okay, back in the olden days, we had 24 CFR 85, A102, A87, A133, and a bunch of other letters involved. How do you know if your policy has been updated? If you see anything that starts with a regulation that starts with an A as opposed to 2 CFR 200, your policy needs updating. Okay, just trick of the trade. And yes, there are still policies out there that have not been updated. I was recently working on a policy that was developed in 1988. They missed a whole bunch of regulations over the years. Again, if that's you, ask for help. Okay, so the 2 CFR 200, the first part is all of the acronyms and definitions. Those of you who are new are probably still trying to learn the acronym language. It's a lot. There's a lot of stuff involved. And a lot of that will be included there that will tell you, what is protected personally identifiable information. What do we mean when we talk about that? General provisions, pretty basic grant information. You won't spend a lot of time there. Subpart C, for most of you, if you are interested in how grants are awarded and some of the things that the funding agencies look at, Subpart C is a great place for you to go look. Majority of you, Subpart D is where you're going to spend most of your time. Get comfortable with Subpart D. These are all of the requirements after you actually receive the award. We talked about some of them, financial management, internal controls, procurement, record retention. All of those requirements are included in Subpart D. Subpart E is all about what's an allowable cost. Not just what's an allowable cost, but how do we document it? What can we do? What can we never do? What can we maybe do? All of that's included in the cost principles section. Subpart F is all about audit requirements. Honestly, we're not going to spend much time at all talking about audit requirements in this training. We will spend some time with cost principles. Any questions yet? Okay, let's talk about standards for financial management systems. Do we have a system? And the answer is yes. How do I know you have a financial management system? I mean, without even asking, I know you have some kind of financial management system. How do I know that? Because you're continuing to receive grants. How many of you are involved in that system? How many accountants do we have? What system are you using? MIP is a good one. Sage is good. And well, that's, I'm not sure on that one. Bella, yeah, good. What's important? What are you looking for in your system? Yeah, ability to track funds and the ability to report that information in a way that's usable. I mean, let's be honest, how many people outside of this training are going to be super comfortable looking at a balance sheet or an income statement? I mean, we're pretty comfortable with it because that's our standard. But is that the most usable information? And that's what you have to think about as you're talking about a financial management system. What's another big thing you're looking at? Will it bring all of the pieces together? If you have to take the information from your system and then do a bunch of spreadsheets, you may need to look at your system. You know, is it being used to, are we using all the functions that exist? Why can we not print the reports we need? Those are things you need to consider because we're trying to get this information to be usable for people who are not accountants. We're going to talk about different components and standards for an effective system. We're going to talk a lot about the requirements too. Okay, benefits of a sound financial management system. First off, long-term financial planning. We've got to accurately organize grant activities, tracking, effective, efficient use of NAHASDA funds. How do we know we're using our NAHASDA funds appropriately? What are the reports? What kind of tracking do you use to help demonstrate that? How many of you split your NAHASDA program into the grant, the allowable activities? Does everybody know what I'm talking about when I say that? When you look at your IHP, you have a list of activities. Yeah, subclasses. Yes, believe it or not everybody does that. I don't understand it because I think it complicates things considerably. But for the most part, the way people set up is they have their IHP and they set up an individual fund subclass for each activity in the IHP. As part of the reporting, everything will roll up into one NAHASDA amount, which is how it should work. Why do you want to look at each individual activity? Are we achieving our objectives? Reporting expenses correctly. You know, that doesn't seem like it would be such a big deal, and yet it really is. Are we putting things to the right account? You know, think about maintenance. How many different activities do you have on your IHP that have maintenance involved? I mean, at least 37 act. Does everybody have an activity for NAHASDA maintenance? Any other areas where you would have maintenance? Any other activities? Maintenance, contract costs. Yeah, rehabs, building improvements, office building maintenance. Yeah, all of these things. If you are operating a rehab assistance program, is anybody doing that for a homeowner? Okay, tell me what that acronym is, Nicole, because I think I'm going to like it. Tribal Repair Improvement Program. Yeah, that's a great one. Is that an emergency repair program too? Or does it do long-term, or does it do both? You have that too, you've got two separate programs. Yeah. Is that important for you to make sure that every time you have a maintenance charge come in, that it goes to the right activity? Yeah. Absolutely. You need to know that. You need to know that for tracking purposes. You need to know that for reporting purposes. You need to know that to look at, what have we done? Was it enough? Was it what we said we were going to do? And if not, what happened? And that is demonstrating accountability. Not just to the tribe and tribal members, but also to HUD reporting. Can we give you numbers with confidence? How many of you have other funding activities running through your housing? And everybody has had treasury funds in the last year. Yeah, federal and tribal fund. What about state? Has anybody had some additional state funding through some different COVID programs? Yeah, you've got to be able to track each piece appropriately. One of the big differences is every time you have a different funding agency, there are different requirements involved. And you have to make sure that you, number one, understand them. And number two, that you're reporting things correctly for those reporting purposes. Does that make sense to everybody? Yeah, it's a lot. So let's get into overview of the system. Tailor your system to your staffing and your organization structure. How many of you have more than, well, let's start. How many of you have fewer than 5 people on staff total? Excluding maintenance. About fewer than 10. Fewer than 20. How many of you do all of your financial reporting internally? How many of you use a fee accountant? Mhm. As of 21, you're doing it all internally? Oh, good times. Got a lot of tribes who are right in the middle of that transition as well, for 2021, 2022. You do all of it internally. Yeah. Is that fine? Yes. Is it fine to use the fee accountant? Yes. Is it fine if you're using the tribe's accounting department? Yeah. They're all perfectly reasonable ways to do it. It just means that what works for you specifically may not work for somebody else. Here are the things you have to have. These are 2 CFR 200 requirements. 300 to 309 financial management system standards. Must identify federal awards received and expended. Okay, that seems pretty simple. What does that mean? Every grant has to have its own fund. You can have multiple different subclasses, subfunds within each fund, but each award must have its own set of books. Accurate, current, complete disclosure of financial results. Okay, what's that mean? Everything for the reporting period is included. It's put to the right place. And it's timely. Well, how do you know? Whose responsibility is it for accurate, current, complete disclosure of financial results? It's everybody's. Everybody's got a role in that. And think about it. Think about the maintenance example. Who's coding those charges? Is finance doing the coding, or is finance entering the information received? Staff and finance code should be reconciling to verify. Who's going to do review as well? Why is finance not doing the coding? Let's address that first. Think back to maintenance. Who did that coding? Maintenance manager. Why maintenance manager? Because they have more info. Yeah, I don't know. I'm in finance. I know you bought some supplies. I don't know which activity they were for. Whoever is making that call is who does the coding. Then it comes to finance, and finance enters that information. If there's anything that stands out, you would definitely ask that question. But in general, finance is entering the information they're given. Do we all agree on that? Okay, so how do we get that information checked? How do we verify it? Because we are. Yeah, who gets your report? Who's going to look at that budget to actual for your trip program? So I told you I was going to love that acronym. Who looks at that report? Here's what we had planned to do for this year, and here's what we've done so far. Everybody. Those managers need to get the reports, and they need to review it and make sure that this information that they gave to you is what is showing up in the report. Okay, that's step one. That is how you get accurate, current, complete disclosure of financial results. Then that information should go through your director, through your board, through council for their review as well. But it starts at your staff level, because they know what they did. Okay, does that make sense to everybody? What's the main thing I'm trying to make sure everybody understands? This is not just on finance. This is on everybody. Okay, identifying the source and use of funds. Control over and accountability for funds, property, and assets. That sounds fun. How do you have control over property and assets? We've talked some about funds already. What are some assets you have? Oh yeah, yeah, rental units. Are those assets or housing stock assets? Yeah. Stuff you own. Buildings. What else? Vehicles. Heavy equipment. What's the basic control over and accountability for those things? What do you do? Are you just going to take everybody's word for it? Inventory. Yeah, go touch them. I have way too many stories about that. I've been doing this for a really, really, really long time, and there's things that happen. Yeah, documentation, deeds, titles. Make sure that when you purchase something, that it actually makes it into your inventory and make sure somebody who didn't have anything to do with that goes and checks and touches it and said, yep, here it is. Comparing expenditures with budget, we talked about that. You have to do it at each award level. So NAHASDA budget to actual really encourage you, and it sounds like you're already doing it, to look at it at the program, at the activity level as well. Why? Because our maintenance can be on target for NAHASDA overall. But when we break it down by activity, we've got stuff all over the place. And you won't see it at the NAHASDA grant level. Does that make sense? Written procedures to meet the requirements for payment. Does anybody know what that's talking about specifically? Drawdowns. Do you have written procedures to ensure your drawdowns are done correctly and timely, and that you are getting that money out the door in a timely manner? Is anybody in here doing an advanced drawdown on their grant? Yeah, most people just aren't doing it right now. I think that's probably going to change as interest rates go up, but in general, the hassle hasn't been worth it. So most tribes just have not, and that's fine. So how long can you have money on hand? Three days. Why? Why does it matter? I mean, you're going to get it out the door. It's going to be used for allowable grant purposes. What's the big deal about 3 days? What's the purpose of the grant money? Is the purpose of grant money to provide a profit? Or is the purpose of grant money to provide services? Yeah, your job, the whole reason you get grant money in the first place is to provide all of these services that you've put in your IHP. If the money is, if your grant funds are sitting in your bank account, are they providing services? No. Remember when I said we'd talk about government accounting and some of the theory behind that? This is piece number one. The whole reason you get grant funds are to provide services to your tribal members. Okay, written procedures for determining allowability of costs in accordance with 2 CFR 200 subpart E. Subpart E is allowable cost principles. What's the basic thing you're looking at there? And it's something we've already talked about. In fact, we've talked about it in a lot of detail. Somebody knowledgeable is reviewing that cost to make sure that it is allowable under our award. Is this in our IHP? which activity does this fall in? When you have staff coding, that's step one. When you then have managers reviewing, that's an additional oversight. Key is you've got to have a written procedure in there. And if you need some help on that, shoot me an email. I guess now would be a good first time to put my email in. Okay, NAHASDA has a few different requirements than 2 CFR 200. One of the biggest ones is on program income. 2 CFR 200 says program income has to be spent before you spend your grant money. Do we do that with NAHASDA? No. And 24 CFR 1026 says we don't have to. Okay, questions on this? This is the overview. We're going to start digging down. How are y'all doing so far? We're about an hour in. Anybody regretting their life choices in accounting right now? Okay, the specific rule on identification of federal awards. 2 CFR 200 302 B1. Financial reporting 302 B2. NAHASDA 10552. What is that one? Anybody know what we're talking about on the NAHASDA 24 CFR 1000? Couple of things there.
Did you say 24 CFR 1000 for the
Yes.
IHBG activities and stuff?
Mm-hmm. IHP activities and stuff. I was trying to remember, does that mention self-monitoring? And it does not. Which is fine. You've got to have financial reports. You have different requirements for record retention. Counting records, 2 CFR 200 302 B3. Internal controls. You have to have an internal control system. Have to have budgeting. Have to have reporting. We talked about cash management and payments. We just talked about allowable costs. Everything we just talked about, here's where you find more info. Again, 24 CFR 1026. We talked about the program income. That's huge. Bonding. How many of you are doing construction? The construction bond requirements under 2 CFR 200 are a lot more stringent than what they are under 24 CFR 1000. Does anybody know why? There's actually a very logical reason. Is Indian preference required under 2 CFR 200? And the answer is no, it is not. Is it required in NAHASDA? Yes, it is. When using Indian preference, a lot of times you're going to be dealing with smaller companies. And basically, the way the NAHASDA rules set it up is to make it easier for small startup, just newer companies to be able to comply with the requirements. So make sure you've got some familiarity with that if you are doing construction as far as your bonding rules. Allowable costs for housing to employees. Can employees receive housing assistance under NAHASDA? Well, yeah. As long as they're qualified, as long as they're eligible, sure. Do we allow housing costs under I don't know, under USDA food distribution? Do they allow housing costs for employees? No. We're allowed to do it because that's the whole point of the grant. So that's why there's an exception there, because in general, housing is not an allowable cost. Equipment sales. Equipment sales in with NAHASDA, what happens to that money? We've got a bulldozer. We're going to sell it. Where does that money go when we sell it? Program income. Yeah. If you are operating another grant and you want to sell an asset, there are significantly more steps involved, and you may be required to give that equipment to another program, or various and sundry other things might have to be done, but under NAHASDA, it's program income. Can also be used to purchase new. I mean, we trade in our vehicles a lot of times. Okay, assessment of a sound financial management system. Here's the parts. We have reporting. Reporting comes from our accounting records. We have internal controls over that information. We have a record retention policy. So we keep all of the records for a certain time period to support all of that information. We have budget control. We've only got so much money, and we are determining how we're going to spend it. We have allowable costs. There are things we can do, things that we cannot do. If it's in our approved IHP, it is an allowable cost. What's source documentation? We haven't really talked much about that yet. We will, but we haven't gotten too far into it yet. What is source documentation? All the stuff that supports our accounting records. Invoices, receipts, bank reconciliation or bank statement is a source document. Any kind of invoice would count. Timesheets are source documents. All of that stuff that underlies, that supports all of our numbers, is a source document. Cash management and payments. How do we do that? How do we know we are paying appropriately? Do we have a system, or do we just pay whatever comes across the desk? Better have a system. Okay, so everybody in here Northwest? Hey, I'm trying to figure out breaks, and let's go ahead. Let's keep going here. Talk about NAHASDA IHBG funds first. I'm very confused with time today. So when I screwed up, notice it's not even an if, it's a when. Noon here. Yeah, it's noon here too. But for most of the class, it is only 10 o'clock. It's just coffee time. I'm going to try and hold out for about another, let's at least finish this section. We'll take a break and then we'll come back and go to lunch. All right, NAHASDA IHBG funds. What does NAHASDA stand for? Normally, I've asked this question before now. And remember, you can unmute if you want to answer it. Just say it and not try to write it out. Native American housing assistance and Self-Determination Act. Why is that important? I'm going to put a ton of emphasis on the self-determination part. Why? You decide how you are going to spend your funds. You determine, the tribe, TDHE, determine what are your priorities. What's most important for your tribal members? There's one piece that you have to do. Does anybody know what that piece is? What's the one activity everybody has to do? Maintenance and operation of 37 Act units. Why? Why do you have to do that part? Oh yeah, everybody's gonna do their self-monitoring too. And we'll talk about that some, probably tomorrow. What do you know about 37 Act and why do you have to care? If you're trying to type an answer, give me a thumbs up. because IHBG allocates funding. Part of the formula, we're going to do a little history lesson here, okay? Before we had NAHASDA, we had 37 ACT units. You still have, or you probably still have 37 ACT units. You still have mutual help. You still have 37 ACT low rent. Those are 37 ACT units that were carried into NAHASDA, okay? As part of the formula for your funding, you get a subsidy for every 37 ACT unit you still have. And in return for getting that subsidy, you have a requirement to maintain and operate those units, okay? So that's the piece that you don't have a lot of say in. You have to provide that. That was part of the deal. Okay, everything else is self-determined. How many of you run NAHASDA rental? Anybody do tenant-based rental? Units that you assess with rental funds that, and you don't own the unit. College housing assistance. Down payment assistance. We talked about emergency repair. Yeah, and that's not unusual, Manuel. A lot of tribes do own all of the housing they assist. There are quite a few tribes that do not own any housing and do all tenant-based rental. Okay. How many of you have a homeowner rehab program? Let's see, how many of you have built housing with NAHASDA money? Only under the home ownership. We have, yeah. How did you decide you wanted to run these programs? Did you just wake up one morning and go, hey, we can do that. Let's do it. Or was there discussion? Was there a request from, yours is based on wait list. Membership has a need. Yeah. All of these things are you exercising your self-determination as to what housing you believe is most appropriate for your tribal members. And where do we put that information? What goes in the IHP? Make sense? What happens if you have something in the IHP and you don't spend your budget? Accumulates for the following year. You carry it forward in your next IHP. Finish it up the next year. What if it's because nobody applied? Then what do you do? What happens if you put in a program that nobody wants to use? Does that ever happen? It happens all the time. Determine a new activity. Transfer it to an existing activity. Yeah, all of these are options. This is how you respond to the needs of your tribal members, okay? And again, this is all financial management. How do we know our money's going where it needs to go? It all comes down to you have a limited source of funds. I mean, you're only going to get so much money. How do you decide the best use? Okay, the official guidance says identification in its accounts of all federal awards received and expended and the federal programs under which they were received. Federal program and federal award identification must include, as applicable, the assistance title and number, federal award identification number and year, name of the federal agency, and name of any pass-through entity, if any. This is where you have to identify each individual award. Again, as we discussed, can you have multiple different funds within that group? And the answer is absolutely. But when you report on your SF 425, what gets reported for NAHASDA? And that's your official reporting, one of your official reporting documents. Do you report each activity that you've funded, or do you report the total funds? Yep, it's your cumulative. That is the bare minimum that you are required to do. You have no requirement under the regs to do more than that. If that's all you do, how are you going to get the information for your APR? Yeah, what are we going to do with our financial report? If we only report total NAHASDA, again, we're still just looking just at the NAHASDA portion. Can we physically split it out? Could we, when I talk about using spreadsheets, would this be one of those times you would go through the GL and pop it all into a spreadsheet? And is that acceptable? For reporting purposes, could you do this? I 100% agree. You should track it through your accounting system by activity. But by regulation, is it an acceptable answer that as long as you're tracking NAHASDA in total, can you do a manual reconciliation of that information? The answer is yes. And there are quite a few tribes who do. Is it okay? Yeah. What's the problem with that? Why isn't everybody doing it that way? It is so tedious. Yeah, it's a lot of extra work and it opens up the door for errors. Anytime you have to manually take information and put it into a spreadsheet, there's an increased chance you're gonna screw something up. Not because you're a bad person or you're not extremely intelligent, But because anytime you're moving numbers manually from one place to another, just opens up the door for mistakes. Something's going to get transposed. I've seen situations where they were entering everything with the cents and then somebody stopped in the middle. Well, now it doesn't balance. Yeah, it's not off by much, but it's still off. And we got to figure out where that went. So yeah, it's such a big yuck. Nicole, that's really a beautiful way of describing it, and I completely support that. If your system will let you track by activity, do it. It's going to make your life easier in the long run. If it won't, then it's still doable. It's just going to take more time. Why do you have to know the federal award identification number and assistance title and number? Other than because the rules say you have to? What's the point? Is there a point? There is a point. Multiple grants, knowing where the funds are, and being able to verify what is required. Okay, you have to know that assistance number is going to be critical when you're looking at internal controls, when your auditors are looking at information as to how things will be tested. All of the requirements, all of the compliance requirements are detailed out by the assistance number. Okay, so it's important you know what you've signed on for. Questions on that? Federal award identification, if you have multiple grants happening, you need to be able to go back and look at your specific grant and see what did we sign up for as far as reporting and usage and everything else. It's just a way to make sure you're on track with what you're doing. Any questions on that? Okay, here's your basic NAHASDA identification. Why does NAHASDA start with 55? Let me ask something else. Does this number, this grant number change? From year to year for NAHASDA? What about that assistance number? Does that ever change? Why not? What makes NAHASDA special? Yeah, it's the same award. We're just getting new money in every year. Why, for your purposes, for reporting purposes, is that a big deal? There's a few reasons. Tracking carryover, that's a big one. How so? That money just automatically carries forward. Why does that matter? Because back in the olden days, way back when I started in HUD, that's my old lady voice for you. Every grant, we had new grants every year. Okay, how many of you are familiar with the schedule of expenditures of federal awards? Actually, that's not even as relevant. Think about your CFA or think about your SF 425. You have to report for each grant, and you have 6 open grants for just for NAHASDA. You know, one's still got $50 in it, one's maybe got $25, one has 1,000 something. Think about the paperwork involved in that. Think about the reporting, financial reporting, internally and externally involved in multiple different NAHASDA grants. It was a hassle and a half. Because you still had to track everything. And do we think about charging out that last $5? No, we don't. Things would just hang open forever. NAHASDA had said, you know, we're not going to do this anymore. We're going to take all of the back funding and put it in one account. And this is where your new funds will go every year. And it is so much easier to do it this way. We're looking at one APR. We're looking at one line item on our SF 425, or I'm sorry, on our schedule of expenditures of federal awards. We're doing one SF 425 instead of 6. Okay, so you're very grateful to those who went before you because this makes your life easier. Do you have any questions on this? Just some side information. This 14867, there is a compliance supplement that is issued every year by OMB, and you can pull the supplement, the compliance supplement, by its assistance number and see what are the material compliance requirements that will be tested and will be tracked. Has anybody in here seen the compliance supplement before? If we have time tomorrow, I'll try and pull one for you. If anybody wants, former auditor, you know exactly what I'm talking about. Yeah, that's what your auditors are required to look at, and it's great help for you on the finance side to see here's what's considered significant for compliance purposes. So if you have any interest in looking at one, if you want to see a copy of the 2022, shoot me an email. I'll be glad to send it over. So what are the things we're trying to look at? What questions do we get asked the most often? What was our funding for the year? How do we get to our money? How do we get to our money? Does it just fall into our bank account? Drawdown of VLOCs. What's the step we have to do first to get our money? Submit the IHP. You don't have an IHP, you don't have any money. So you get your IHP submitted, you get it approved, you get your funds. What are the eligible uses of our funds? Whatever we determined as a tribe and had approved in our IHP. We've talked about tracking our funds. Where on the financial statements are the NAHASDA funds recorded? Think about your own financial statement. Yeah, do you have a fund for NAHASDA? Do you have a fund for program income? Do you have a fund for non-program income? Do you have to have separate funds for program and non-program income? Nicole's got each revenue source separate. Yeah, in our perfect world, that's absolutely what we want. If you do not have a separate section for program income, where is it reported? Let me reverse that question. Why do you want to track this separately? Why is it important for your purposes to track program and non-program income separately? Yeah, because otherwise it's going to be restricted. If you have your program income lumped in with your grants, good luck. Yeah, if you do not have non-program income separated, then you have to treat it like program income. Is it a huge deal? No. But it does limit your options. Quarterly reports and annual reports for NAHASDA spending filed. Which report is that? SF 425. How often do you have to submit it now? Annually. It is now an annual report unless you do a drawdown. Yeah, if you're investing, then you do quarterly. Yeah, it was effective, I believe, in June. But yeah, if you are doing a drawdown and invest, you still have to do a quarterly. How do you know if your report's accurate? What are some of the things that you can do to test that report? Yeah, if you are an investment tribe. If you are not an investment tribe, and I think we said nobody in here is, you tie your reports to the system. Yeah, it's got to be supported by your accounting system. What else can you use to check your report? SF 425. Ooh, can you use ELOCs to check your drawdowns? Yes, you can. And should. You know, in all of the times I have taught this class, you are the first person, Lorraine, to say, check it to ELOC. And it's a great way to do it. 100% do that. What else do you tie out to? What else should your SF 425 tie to? Better tie to your APR. For those of you who are involved in putting together the schedule of expenditures of federal awards, should also tie to that. Yep, all of these things. So what do we need to do to have a clean audit? Everybody wants to know that. What do you have to do? What is a clean audit? Financial statements are fairly presented in all material respects. Yeah, and in compliance, we do not have any issues. We're following our procedures, we're following our rules, we've reconciled, we've done the things we're supposed to do, and we can document that we have done it. The first step to having a clean audit is doing your self-monitoring. What is self-monitoring? I know you know it's a requirement, but what are you testing? Self-monitoring is all about your system and your processes. Does our system work, and can we prove it? Did we do what we said we were going to do in the IHP? And did we do it in accordance with the regs and our own policies and procedures? And just for fun, one more time, why are policies and procedures so important with self-determination? Because you're making the call as to what's important. And you're making a lot of the decisions on how you're going to do it. Think about eligibility. Does anybody know what's required under NAHASDA for somebody to be eligible for admission into a program? Low-income Native American. How many of you in your tribe have only low-income Native American as an admission requirement? Okay, you don't have tribal preference? Yeah, tribal preference, that is self-determination. If you do veteran preference, self-determination. Yeah, this is why it's so important. You know, what did we say we were going to do? How did we describe this activity in our original IHP? Yeah, it depends on it, what you're using it for. In general, most tribes have tribal preference, which means tribal members first, then members of other tribes. Some do veteran preference, some do elder preference. I mean, there's all different kinds of things that you can include. Minority, small minority, women-owned businesses when you're looking at procurement. Do we do tribal preference in our procurement as well? Yeah, so this is why this is where policies really come in to make sure you have spelled out in your operations what you've got in your IHP. There's all these different pieces that all come together and make your system work. Hey, anybody ready for a break? Besides me? All right, I have 37 after. Why don't you come back at 50 after, 10 minutes before the hour? We'll go, another hour after that and then break for lunch. Sound good? All right. I will see you in 12 minutes. All right, any questions yet? I don't think I've ever had a class where everybody was back on time and in chat acknowledging. Good job. All right, IHP must complete and submit to HUD 75 days before the beginning of your program year. No approved IHP, no NAHASDA grants awarded. Hey, Alicia says hi. Told y'all he'd be around. I mean, it's pretty basic. Does everybody have theirs in? If you're December 15th or December 31st tribe, you've got a few weeks. If you're a 930, should already be in and approved. Sign all originals of your grant agreement. Yeah, I think, is everybody in here 930 or do we have a lot of 1231? 1231. Got 2 930s, 1 1231. Nobody else wants to talk about it. It's fine. Okay, retain an original document, original signed. HUD gets the other one. Keep copies of all the documents. Pretty simple. Allowable costs. Who's excited for allowable costs? Nicole's excited. Amy's okay with it. What's an allowable cost under a federal award? We're going to talk some more about written procedures for controlling consistency. Little bit on direct and indirect. Is anyone a part of an indirect cost plan? Okay. Are you part of the tribe's indirect cost plan? Oh, you've got the negotiation side. Bless your heart. What's the difference between direct and indirect, or having an indirect cost plan? Okay. if you have an indirect cost plan, you are basically, you've got a setup of here are the costs that we are classifying as indirect. And these are basically, admin and planning costs. Payroll for multiple people, all of those type things. Things that cannot be specifically allocated to a particular activity. Those are indirect costs. And you've got options. Option number one is you are part of an indirect cost plan within a negotiated indirect cost rate. Even if you are in a negotiated cost rate, you are still capped with your NAHASDA funds. Okay, so that's that's option one. Those of you who are involved with an indirect cost plan, are you a housing department? Usually, and this is not a hard and fast rule, but usually if you are a TDHE, most TDHEs do not have an indirect cost plan. And it's a simplicity's sake more than anything. Okay, so we've got two different things here. If you have the indirect cost rate, let's say it is 28% of personnel costs, salary costs. So everything you do has an additional 28% goes to the indirect cost pool to pay for all of these costs, such as building maintenance, utilities, phones, all of those things that are used by everyone are indirect costs. If you do not have an indirect cost rate and you are using the planning and admin portion of NAHASDA, then anything that cannot be directly allocated to a particular activity goes into planning and admin. That planning and admin is capped. Is anybody in here in a 30% cap? I expect most everybody is probably in the 20%. So what does that mean? Okay. Your indirect cost rate is 29%. Correct, Manuela? Is that true? Tribe-wide is 29%. You still can't spend more than 20% of your total award on admin costs, including indirect. Honestly, if you're going to mess up indirect, that's where it's going to be. In general, it's pretty straightforward. Many different agencies have a cap on the indirect that you can pay with grant money. It's not just HUD. What does that mean to you? Yeah, even with. It's not necessarily about how much staffing you're allowed to have. It's how much grant money you're allowed to use. Okay? A staff is almost always direct. Finance, front desk, those may be indirect, or planning and admin. Most of your staff is probably direct costs though, which is not going to impact your planning and admin. And again, what does that mean? It just means you can't use grant money. Can you use program income to make up the difference? Yes. Can you use non-program? Yes. Those costs still have to get paid. Particularly those of you who are in the tribe's indirect cost pool. Those costs are still going to be there. It's just you can't use grant money on it. So how do those get paid? With non-grant funds. Okay, is everybody clear on that part before we go further? Yeah, you can always do whatever you want with your money. We don't care. And that's what I want you to remember as we're talking about allowable costs. This is allowable under grants. If you want, I've said this over and over many times, and it makes people a little cringe, but if your tribe chose to take their general fund money, hire a helicopter and throw bags of money out of it, okay. Can they do that? Yes. Is that going to be an audit finding or a monitoring finding? No. Is it a good use of funds? No. But it's tribe's money. Tribe can do what the tribe wants to do with their own money. The rules kick in once you take grant money. Okay. So let's talk about allowable costs. Must comply with the financial management provisions to CFR 200-3027, written procedure for determining the allowability of costs in accordance with subpart E cost principles and conditions of the federal award. Okay, within that, there's no universal rule that says this is always a direct cost, this is always an indirect cost. It just depends. How's that for nice and specific? Okay, here's a pretty decent example. How many of you have your own building for housing? If you have your own building for housing, are utilities going to potentially be direct costs or indirect costs? And why? Why? Why direct? Yeah, we're not splitting costs with anything else. And we may have some planning and admin in there that cannot be directly allocated, but most of it's going to be a direct allocation. Do we all agree on that? What if you're in a building with all of the tribal departments? Is it going to be a direct cost or an indirect cost? Why? You're all correct. It's indirect. Why? There is no way you can determine specifically what housing used. We can allocate it, absolutely. But can you determine that only this part was used for housing? No. Because you're in with everybody else. Does that kind of make sense? Think about your receptionist. Does everybody have a front desk person wherever you are, whatever building you're in? Is that person direct or indirect? And when I say indirect, I mean planning admin. Good. So you're saying indirect. Why is your receptionist not a direct charge? Amy's already answered a lot of it because they answer for all of us. Is it possible to have your front desk person allocate their time to specific programs? Theoretically, is it possible? And the answer is yes. However, is it realistic? Absolutely not. Can you imagine you put somebody on hold, there's a minute for this program, then you greet somebody and take a payment from somebody else, and then we're sending this person down the hall and signing for this package. You could, but the value is just not worth it. Yeah, it's a lot. So theoretically you can, realistically you're not going to. So when we talk about treating costs consistently in like circumstances, this is where we are. If it's our whole building and we're the only ones in it, probably going to be direct, or at least part of it. If we are sharing a facility with the whole rest of the tribe, going to be indirect. Okay, expending federal award responsibilities. Here we go. This will be fun. Efficient. Oh, wait. So then capping at 20 doesn't necessarily make sense. I would agree with that. But what? The requirement. Some tribes are using 7% of their planning and admin. Some tribes are using 25% and having to fund that additional 5% with non-grant funds. Each funding agency can cap their admin or their indirect costs. There are a lot of programs in Health and Human Services that do not allow you to pay any indirect. I believe LIHEAP is still one of those. Does it make sense that we cannot use grant money to pay the costs of administering the LIHEAP program, the building costs involved? I mean, they've got phones, they've got computers, probably using the bathroom. So we've got, you know, some utility costs there. They're definitely turning on lights. Yeah. Yeah. But again, what's the purpose of the grant? Provide services. Yeah, I don't have an opinion on whether it's right or wrong. I think there's too many variables in there, but it's what it is. And, you know, here's the rules. So how do we work within that system? Because we're certainly not going to try and get around those rules. It's not worth it. And I agree, it can definitely put a burden on the tribe, but this, you know, this is the best system that has been developed so far. Could it change later? Absolutely. Okay, so our goal, efficient, effective administration with sound management practices. Where do we get that information? That's policy. Policy and procedure right there. How do policies make us more efficient and effective? Not flying by the seat of your pants. Yeah. Set standards. Yeah, we're not reinventing the process every time. Okay. So that makes us more efficient, and we're also more effective because our policy has already laid out all of the pieces we need to have in place before we can do the thing. Administer the IHBG grant in accordance with NAHASDA statutes and regulations. How do you do that? Again, policies and procedures. How do you know if your policies are adequate? First question, do they work? Second, have they been checked in self-monitoring? If you've taken self-monitoring or if you've done the self-monitoring, there are all these checklists and there are pieces in their reg references within there. Yeah, and it gives you the minimum guidelines are included in those checklists. So make sure, do we have this in our policy? Yes. But again, the best way is, does it work? Are we catching things before it's final? If we're doing eligibility, are we verifying that they are actually income eligible at time of admissions? If we are cutting a check, do we have all of the procedures in place so that we know that this is the right amount and who ordered it? And we've got all of these signatures to show the right people have looked at it before it comes to us for the check to be issued. Do you catch your problems, or does your auditor catch your problems? Sound organization and management techniques tailored to unique needs. More policy, always. What's another piece? How many of you have an organization chart? Yeah, and why do you have an organization chart? To show how information flows. Who does everyone report to? How does information go from council's priorities down to the staff? I mean, do we just guess, or, do they issue guidances and documents that say, hey, here are some things we want to focus on. Here are things we're going to do in the future. Here's our long-term goal. If you want to build housing, you're not going to do it in a year. You need to start thinking about it now and develop a plan to do that. That's a sound organization and management technique tailored to your unique needs. Those of you who are using a fee accountant, that is also employing sound organization management techniques. You have to be consistent. You have to provide adequate documentation to support costs charged to the grant, period. Why is consistency so incredibly important? Because your tribal members are going to talk. If you've got one who doesn't have to follow the rules, how long do you think it's going to be for others to ask questions? Well, if they don't have to, why do we? I mean, I'd be asking. Think about it internally. If, you have people who don't have to fill out all of the documents. Is that consistent? Somebody else will fill out my timesheet for me. Is that fair? What's the example that's set? Some people are special. You're not one of them, but some people are. So yeah, always be consistent. Define what adequate documentation is to support costs. That goes back to the systems, that goes back to source documents, all of that. That's supporting our cost charged to the award. We are not set up to earn a profit. Not the goal, not with grant money. If you have money left over, is that a good thing or a bad thing? We have a huge budget surplus for 2022. Is that good or bad? Depends. What does it depend on? Why? Yeah, and Amy, it's not just you. Most tribes are having to save up to accomplish bigger projects. And Nicole's bringing up a great point. Right now, finding contractors is really hard. I mean, it just is. So you may have a lot of money left over, but is it because you were unable to find people to do the work in a qualified manner, or you're just holding on to the money for no real reason? And, you know, the second answer is wrong. You can save for multiple years, but that should also reflect in your budget as well. That you know you're trying to do a set aside for, let's say you want to build 10 units. Yeah. Nicole's is a classic. We literally can't find anybody to take our money. So we're not doing the project right now. Is that going to be no? Oh, I know, it's terrible. And it is everywhere, and it's not just that. I've been holding off on getting my fence fixed because it's stupid expensive right now. I mean, part of it fell down, so it had to. Windstorm, Oklahoma, high. But the part that's still hanging on, man, I'm putting off until prices start coming down some. It's just a weird time. And what can you do about it? Realistically, what can you do? Not a whole lot. I mean, if it's something that's a health and safety issue, you have to get it handled, and you're going to pay whatever, and you're going to hire however far out you have to. But if it's something that can wait, it's going to wait. Is there anybody who's not having that issue? Yeah, it's just supply chain and everything is just, it's crazy. How many of you have tried to buy cars? I've been working on a grant where a lot of their funding was to buy a vehicle. It's been a nightmare. Nicole, do you feel like you've got to grab whatever's there right now because it's going to be gone? Or is it yeah, prices are high. Not just the pricing, it's the availability. And especially with grant money, because, you know, you can't just walk in and write the check. There's usually multiple layers of approval involved, and in the procurement process and everything. And whatever they had at the start of the process, by the time you get it approved, it's long gone. It's just weird right now. Those of you who are new, just know this is not our normal. And I'm assuming eventually we will get back to what we consider normal. Okay, so let's talk about the specifics, which kind of comes into play with what we were just talking about. Dang it, I don't know why this one page does this, but here we go. It's going to jump around. Necessary, reasonable, allocable. What does that mean? What do we mean when we say it's necessary, reasonable, allocable? We have no idea why it does this, and it's only this page. Actually, it may be the next one too. just going to let it sit here. Necessary, reasonable, allocable. Necessary to perform the grant. Is it really needed? What is a reasonable amount? Is current reasonable completely different from what reasonable was 2 years ago? And the answer is absolutely. Yeah, you've got to have something that documents, we need this to do the grant. This is the best amount we can get, and it is allocable directly to the award. We're not buying it for fun. Where do you get that information? Are you generating necessary, reasonable, allocable? Oh, yeah. Yeah, you do need rehab. So when you are going through the process, question 1, are you going through a procurement process? Say yes, because you better be. Okay, y'all are doing 3 bids. Okay. Do you have a scope? Yeah, 2's fine. The standard says at least 2, responsive, responsible. Scope of work of what needs to be done. Those of you who are in a rehab process right now, are you looking to see what do we have to do right now as far as health and safety issues versus things we would like to do? And are you prioritizing? You know, if it's mostly cosmetic, probably putting it off. And when I say cosmetic, I'm talking about things like painting. I mean, is that something that needs to happen? Yes. Is the house going to fall down, or is anybody going to be in danger if we wait 6 months? No. I mean, this is just what we're dealing with right now. And how do you make sure that that information is reported correctly? As in, how are you addressing, yeah, we said we were going to rehab 3 units, but we were only able to rehab a unit and we're halfway through another one. How do you document that? Because you are. It's going to show up in your procurement process. And I don't know how many people in here are involved in the procurement process, but that's going to show up in your scope and in your cost price analysis. You've got costs recorded in your software, recorded by unit, which is going to show up where? It's going to show up in your housing management software. It's also going to show up in your IHP on your statement of activities. Here's why we did not rehab 3 units. Because the cost we would have paid is what 5 years ago would have been 10 units. We're choosing to wait for costs to come down, or we're choosing to wait because we're having trouble finding contractors. Are you in trouble for that? No. I mean, this is our reality. All you got to do is document it. Okay, conform to the award purpose. That one's an easy one. How do we know it conforms to the grant award purpose? Because it was included in our IHP. Consistent with policies and procedures. Again, did we do what we said we were going to do in our policy? Did we follow our policy? And if the answer is yes, can we prove it? Do we have all of the sign-offs, all of the documentation, all of that? Was it accorded consistent treatment? Generally GAAP. I'm not going to get into GAAP for y'all because for the most part, I don't care. Who's going to judge whether your financials were presented in accordance with GAAP? Your auditors. If you have a fee accountant, they're also doing it. Is that good enough? I mean, realistically, for operating housing, is it good enough to leave that to your auditors? It actually is good enough. There's a lot you should be doing, absolutely. But are there some pieces that are fine to leave to the auditors as far as GAAP reporting? And the answer is absolutely yes. And we'll talk a little bit more about that as we get into the grant government accounting side. Can't use as cost sharing or matching unless you have approval. Questions on that? Okay, again, allocable costs, chargeable or assignable to a grant. Goods or services are incurred specifically for the award. Benefit more than one federal award, and costs can be distributed in proportions that may be approximated using reasonable methods. What have we talked about? Give me some examples we've already talked about where we have been distributing costs in proportions that can be approximated using reasonable methods. Utilities. We're the only housing has the entire building. Or let's say we have half of it is ERAP or half. Can we distribute that in proportions that can be approximated using reasonable methods? Mm-hmm. Yeah, and how can we allocate wages and benefits? What's our go-to source document to allocate wages? Timesheet. Mm-hmm. Yeah. Is that something we do all the time? Yes. Go back to maintenance. Are they working on multiple activities in the IHP? Mm-hmm. Can we allocate their time charges in a reasonable method? Sure. We've got several reasonable methods. For the entire federal award, do we need to allocate? And the answer is no. That makes sense? Yeah. Is that perfectly reasonable to allocate only between federal and tribal? Mhm. Yeah, I'm assuming, and correct me if I'm wrong, but when you say federal, NAHASDA versus tribal housing activities, yep, allocating between the various federal grants and tribal housing. So you've got grant, 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 and then you've got tribal. Yep. And why do you do that? Because tribal housing is probably operating under different rules. So we can't use grant money. Yeah, so you can't use grant money on it because you're probably assisting, well, not probably, but you could be assisting people who are not income eligible under NAHASDA. Yeah. So you can't use grant money on it. So you're allocating to make sure that no grant money goes to support unallowable activities. Makes perfect sense. Okay, questions on this? Oh, I can't believe we have to say this. Any cost allocable to a federal award may not be charged to another award to overcome a fund deficiency or to avoid restrictions imposed by federal statutes, regulations, terms, and conditions of the federal award. I can't shift things from NAHASDA to something else because, well, there's still money left in that grant. Now, if it is allowable under 2 awards in accordance with the statutes, regulations, terms, and conditions, yes, you can. Has that happened a lot in the last few years? Has there been shifting costs from NAHASDA to CARES or to emergency rent? Yeah, because that's why those additional grants were set up in the first place. So yeah, when we say you cannot shift costs, it means you can't do it to avoid restrictions. If everything is completely allowable under both and you have a choice, totally fine. Okay, so don't get that confused and get yourself freaked out. A lot of that with ERAP. Okay, questions on that? Here we go. Direct cost allocation principle. The cost benefits two or more projects or activities in proportions that can be determined without undue effort or cost. The cost should be allocated to the projects based on proportional benefit. If not, costs may be allocated or transferred to benefited projects on any reasonable documented basis. Finance people, are you tracking how much time you spend on individual projects, an individual allowable activity? What if you're not? Where does that cost get charged? Indirect or planning and admin? Let's go back to the receptionist. Is it possible to have a reasonably documented basis for allocating that person's costs across everything? Could we do an analysis and say, okay, you spend about 10% of your time here, 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 and then this chunk is on the tribal housing side? Could you, instead of allocating, choose to drop it all in planning and admin? Okay, you have options. You need to be consistent as to how you exercise those options. And you need to be able to have supporting documentation for any way you are allocating. But yes, you can do that. What's the advantage and what is the rationale for putting as much as possible to direct costs as far as salaries? Why do you want most of that to go to direct costs? Or what's a reason to do that? Yeah, if you can allocate it, does it give you a better idea of how much it costs you to run a program? Yeah, because you've got all the costs are included. Yeah, we want an accurate report. What does it really cost us to run this? Give me, what's it costing us to run down payment? I mean, realistically, how much effort's involved in that? Who's involved in it? Why would we need to know that? Why do you want to know how much is direct charge for administering a program versus how much is going out in services? How is that beneficial? Is the program going to be worth it? I mean, is it costing us a ton of time and energy for 3 checks that we're writing? What are our options? And what are your options in that situation? For, let's say you've been able to break it down to, for every $100 let's go with $1,000 that we spend in down payment assistance costs us $50 an hour in processing. Why would that matter? Yeah. Is our process just way too complicated? And if so, can we streamline it? What would be a way to streamline it? That somebody who's already working in a similar program starts processing these instead of having a whole group of people set up only to handle down payment. What's another thing you might do? If we're going to spend this much money and this is all we're doing with the grant, yeah, maybe we want to move this to tribal funds. Or maybe we want to completely reallocate that money to a different program that has got more activity. Again, there's not a right answer here. There's not a wrong answer here. This is all your self-determination. This is financial management. How much effort are we putting into it, and is it worth it? What would be something else that would make it not worth it? If we were having compliance issues, nobody ever got all the paperwork in there. Do you want to keep doing that with your grant money? And the answer is probably not. Applicable credits. How many of you have an account with Lowe's or Home Depot? Do you get rebates and discounts? Do you get a, buy $100 and there's a $20 rebate? Does that ever happen? All the time. How's that $20 rebate accounted for? Is that new money? Or is it a reduction in the expense? The reduction in the expense. Yeah, it's not brand new money. That's the key thing to remember here. Got a house burned down. You get insurance money to rebuild it. The house was insured for $150,000. It costs us $175,000 to rebuild the unit. How much cost do we recognize? How much new money are we out? $25,000. Yeah. How would you record it? You're going to have $175,000 debit for an expense. You'll have the $150,000 insurance credit to that line amount. which is going to net out to the 25,000. Does that make sense? Has anybody ever gotten an insurance refund or an insurance rebate? Right. When you record the insurance, actually, let's talk about, you had a refund for a fire. Amy, let's have discussion. Okay, let's have a quick chat. Because again, I want to make sure that we're on the same page. Any chance you can hang out for a couple of minutes after class? Yeah, won't take long. Yeah, yours was for a tribal unit. How many of you are with Amarant and have gotten an insurance refund or a rebate? Where did that money go? How did you account for it? Was it a reduction in your insurance expense back to new construction for a rebuild? Yeah, if you're getting a rebate, if you are getting money back because you did not have any claims, they applied it to your invoice. Oh yeah, that's fine. Yeah, that's exactly correct. Yeah, we're reducing the insurance expense. It's not new money. Does that make sense? Again, that's the key on this is it's not new money. Don't treat it like it's brand new money. All it is reducing your expense for the grant. Is everybody good with that? Okay. Allocation methods. Can you have an allocation model for your cost allocations? Yes. When would you do this? When would you have an allocation method? Could be anything. Utilities in the building. Yeah. How are we going to allocate? What's a reasonable method of allocation? Postage, how are we going to allocate? You have code set up. Yours is the negotiated indirect cost. Yeah. This is if you're not doing the indirect costs. Because the assumption is if you've got a negotiated indirect cost rate, that there was a reasonable, rational method to equitably distribute costs. And in saying that, can some of those principles carry over for cost allocations here? And the answer is yes. A lot of negotiated indirect cost rates are based on space cost. Is that a reasonable method to allocate utilities? Sure. Nicole and copier and postage meter, sign up. What's another reasonable method to allocate those costs for copier and postage meter? How many people are in the department using the copier? A lot of people have a code. Yeah, assign a percentage based on use. Is that a reasonable method? Yes. Here's what I don't want you to do. I don't want you to ever get so sucked into making sure that the cost is allocated reasonably, that you're spending more time on the allocation than it's actually costing you. Yeah, the square footage is almost always reasonable for space costs. Phone charges, makes sense that it would go, how many phones do we have in that department? Do we have a copier that's used primarily by one department? But don't get so caught up in the pennies that you're spending a lot of time doing it. And that's really what you want to watch when you're setting up these allocation models. Use it for the bigger things. If it's costing you $50 a year, don't bother. It's just going to make you crazy. All right, this feels like a good place to pause for a break, doesn't it? Anybody hungry besides me? Okay, is 45 minutes reasonable? Is that going to give everybody enough time to get food? Okay. Makes sense, Amy. I know everybody's got stuff going on. Okay, come back at 1/4 of whatever hour you're looking at. And we'll pick up with direct costs. Sound like a plan? Okay, a lot of the rest of this section is going to be things we have already discussed. So it'll go fairly quickly. Direct costs that can be identified specifically with the federal grant, such as an IHBG grant, and can be directly assigned to grant activities. Examples include compensation for employees who work exclusively on IHBG, cost of materials and supplies for housing maintenance, insurance for properties built with IHBG funds, administration of IHBG funds and programs, and costs for rehab. Is there anything in here that you want to discuss further? That looks like a no. Indirect, again, costs incurred for common joint purpose. Can't be readily assignable to cost objectives, specifically benefit. Oh, Lorraine wants to talk office supplies. What do you want to talk with that? As far as how to allocate? Are you doing an allocation on it right now? Okay. Can you do it? Absolutely. How are you all doing it? I guess the first question should be, are you under indirect or not? No, okay, no, good, that makes more sense. How are you allocating? Do you allocate by number of people? Do you allocate in a method like each person who orders that goes to that person? And reminder, you're welcome to unmute if that's easier. No, and that makes sense because you're allocating for direct costs for office supplies, correct? Or are you putting to add? Okay, that's fine. Do you do it based on number of people? Do you do it by specific person going to the program? Each person orders for specific budget. Each grant has an admin line item. That's fine. So is everything going in, are all office supplies going into admin and then going into the 20% cap bucket? Totally fine. And I think this is one of those that goes back to whether it's going to be, I mean, how much are you spending on office supplies in a year? I think it comes down to, is it worth it for you to allocate it further, Lorraine? And it may not be, that's your call. Are you having any issues staying under your 20% planning and admin cap? Yeah, oh, then you're fine. If you're only hitting about 15%, I don't know that I'd even try. It's a balancing act. Just because you can doesn't mean you have to. The default is it goes to planning and admin. Does that make sense? Yeah, I mean, again, it's up to you. You really want to monitor that cap throughout the year. And if you're not in a situation where every dollar is going to matter for your 20% cap, I'm not sure how much effort I'd put into it. I mean, yes, there are definitely some benefits, but there's also a benefit to not messing with it because now nobody's having to track it. Your call. Does that make sense? Always look at your cost benefits. And there are just definitely going to be things that it's just not worth it. Okay, on indirect, again, it's not readily assignable to the cost objective specifically benefit without effort disproportionate to the results achieved. Think about the receptionist. Can we break it down? Yes. Is the effort involved going to be way more than the benefit that we'll receive from it? Absolutely. You have multiple, does anybody have a number of indirect cost pools? It's usually salaries or salaries and benefits, some do space costs. Those are the most standard. Salary and fringe, yeah. And again, is it a good one? What's good about doing it based on salary and fringe? It's pretty simple. I mean, those are easy numbers to calculate. Is that always the best way to do it? Is that the most appropriate way to address how costs are allocated? Maybe, maybe not. But we got to pick a method. I mean, it comes down to you got to choose a method if you have an indirect cost pool, and that method has to be effective for you. Tribe can allocate, indirect can negotiate, indirect cost rates. Here's where we go. Negotiated rate must be accepted by all federal awarding agencies, except when the statute or regulation overrides it. That's what we have here with NAHASDA and the 20%. Doesn't matter what your negotiated rate is. You cannot pay more than 20% for planning and admin in total. So not just indirect, but the planning and admin you charge within the NAHASDA grant. Okay, if there's confusion, that's usually where it is. So if anybody has a question, feel free to start asking. Okay, Amy's good. Everybody else okay? There's usually some understanding issues with the tribe side on how to apply the cost. And again, it is capped. You can request a waiver. You can justify it. I honestly don't know anybody who has, but yeah, it is an option. If you are currently under, has anybody used the de minimis rate? Yeah, I don't know many people who, actually I don't know anybody who's used it. If you have a current negotiated indirect cost rate, you can apply for an extension for a period up to 4 years. After that, you're going to have to renegotiate. Different ways to allocate costs. We talked about these. Any questions on these? Pretty basic. Okay, treatment of certain costs. Costs that require prior approval. Depreciation method other than straight line. There's no good reason for a tribe to do depreciation other than straight line. The benefits to other methods are usually tax related, and that's a non-issue for you. Let's talk about cost of housing now. How do we get prior approval for cost of housing? As we said, that's not an allowable cost under a lot of grants. How do we get approval on cost of housing within NAHASDA? What's the first thing we do? IHBG. We are providing housing. What if it is for somebody who is an employee or a family member of an employee? Can we provide cost of housing to those people? I'm the director. My sister has applied for housing. Can she be assisted? Yeah, she qualifies. What do I have to do? I have to do a disclosure. Who do I disclose to? You have to do a public disclosure that does not mention any names. How do I get HUD prior approval? Because it says I have to. You have to do a disclosure to ONAP before they receive services. Yep. You have to actually provide more documentation to NAHASDA, because in the public disclosure, we don't include names because protected personally identifiable information. We just have a family member of a staff member has applied for and been determined eligible. When you disclose to HUD, you have to do the full name and everyone, because it is a potential conflict of interest. You cannot assist staff or their immediate family without a prior approval. Does that make sense? If you need some guidance and some forms, reach out. I have them. But yeah, and again, this one is huge because you have to do it prior to assisting. So that is getting your HUD prior approval. So you do all of these things that are in the regs. It's just a case of showing you this is what that means, because I know you all are doing it. Okay, unallowable costs. Penalties, damages, fines, and other settlements cannot be paid with grant money. How many of you have credit cards? Tribal cards, not individual. Does anybody have a tribal card or a housing card within their organization? Okay, got one. Yep. Those of you who do have credit cards, okay, purchasing has, yeah, usually for travel, that type of thing. Let's say I went in, I went on a training out of state. I got an advance. I put everything. Now I'm going to put everything on the tribal credit card. And I get back, and what's the first thing I have to do? Got to turn in a trip report. Yeah, I've got to reconcile, turn in a trip report that shows this was an allowable training cost. Well, I was busy and I didn't get it in time. And we have an interest charge because it wasn't paid in full. Is the interest on that credit card an allowable cost? Nicole is not playing around here. We got the caps. COBRA's got exclamation points. Yeah, absolutely no. We cannot pay that with grant money. What if I got a ticket? I was on official tribe business and I was going maybe a tiny bit fast. Maybe. I dispute it because I would never, but for whatever reason, the nice policeman says I was speeding and I get a ticket. Better open my wallet. Yeah, not your problem. None of this, it doesn't matter if I'm in a tribal car on allowable business. Any penalty, damage, fine is my problem. So here's a question for you. Those of you who do have credit cards, do you pay out of program income and then reimburse program income through federal awards? Or do you pay directly through the federal award? You charge to non-program, you charge to non-program. Why do you do that? And let me add, I think it's a really good idea. Hold that thought on deductibles. We'll circle back to that. A lot of people do pay out of non-program income or non-grant funds first and then do a reimbursement, and that's fine. And I would encourage it if you can, because that way if somebody is late or if there is a charge that was paid that maybe shouldn't have, it's never gone through the federal side, so it's never going to be an issue on the federal side. Does that make sense? And most tribes do it that way. You don't, again, not required. The requirement is that everything charged to the grant has to be allowable. Okay, Nicole, what about deductibles? Are they an allowable expense? In what case? Like an insurance deductible if I have a wreck? Yeah, if it's insured. I wouldn't I think it's going to be a fine line, and I think that I would probably do the deductible out of non-program until we are able to get more information such as fault, anything like that. I mean, if I am broadsided while sitting at a stoplight, that's one thing. But in general, I wouldn't, and that's because I used to be an auditor and I'm super cautious. That's me. But I think you can probably, depending on the situation, you may be able to make a reasonable argument that why it would be, but I wouldn't. Does anybody else want to jump in on that? You would charge grant or non-program? Wouldn't. Okay, yeah. I just, for the amount of the deductible versus the paperwork involved in trying to justify why it would be an allowable cost. Again, going back to the cost benefit thing, I don't think it's going to be the best use of your time. I'm sitting here trying to think of situations I'm aware of, and I'm not aware of anybody who has charged the deductible to a grant. And I'm also thinking about now in a fire or something like that. Yeah, I have seen it done because that is part of, I believe the justification was that it was part of the cost of getting the unit back, returning it to, you know, a whole status. Yeah, I just, again, used to be an auditor. My first response is always no. And then I think about it. And the answer now is maybe. Good questions on that. Okay, we talked about written procedures for allowability of costs. Procedures have to be consistent with typical costs that are normally incurred and allowable under the IHBG fund. First thing I want you to do is go look at your financial policy and see, do you have a statement in there that says costs will be reviewed by someone knowledgeable of the grant prior to payment? Because that's your procedure right there. Again, you can, and it has to be a written procedure. This is in 2 CFR 200. You can't just say, well, this is what we do. Has to be a written procedure. Questions on that? See, told you that'd go fast. Let's talk about budgeting. Do you have any more allowable cost questions? If you want to hear more about allowable costs, and I will tell you also internal controls, intermediate financial management covers a lot of that. So depends on how interested you are. Let's talk about budgeting. Why is it important? Well, the first reason is because it's required. We have to have a budget. Where is our budget? What is our budget? IHP. Yeah, we're required to do a budget in NAHASDA, and it is our IHP. How do you budget? You just throw some numbers down there and say good enough? Do you take last year, add 5%? That's not the right way to do it. Do you have a budget process? Think about your IHP. You base off prior year, factor in inflation and other factors. Other factors being number of served, how we choose to allocate our funding for this year. Those are the other factors, correct? Yeah, we've got two basic budgets. We have our grant budget for how much money we expect to receive from our funds, from our grant funds. And in housing, we're also generating revenue at the same time. So that money is usually used to offset, to help with funding our other projects. Okay, what we're trying to do, the whole point of doing a budget is what are our priorities? Here's how much money we expect to have. Of those funds, what's number one? What's number two? What's number three? Do we have any new programs we want to add? Are we taking out programs that we've had before because either they're complete or they weren't as effective as we had hoped? What happens to that money? How are we controlling our funds? How are we showing that we are accountable for our grant funds? We discussed earlier, and we will discuss over and over, your system must provide for a comparison of expenditures with budget amounts for each award. Budget to actual. Why is it important? What are you getting out of the budget to actual report? By you, I mean the end user, whoever that may be. Can see we're spending